it's Tuesday, February the 3rd of 2026, and the market is calming down, if you can call a $10 range calming down. In past years, a silver range of $10 would have been headline news, but today it's actually a mild day. And so I wanted to talk about where we are right now in the silver market, bring you up to date a little bit on some of the dealers' circumstances that they find themselves in that may influence the way we buy and sell silver for a little bit. And then also I wanted to show a little bit about how maybe you can make money even in a declining market if you just have a little bit of knowledge and you keep your eyes open. But let's go ahead and start with the market today. The market opened at $79.17, which was about a 5-cent gap up, if you can call that a gap up, from yesterday's close of $79.12. It went as high today as $89.21, which was higher than yesterday's high by about $1.15. And then it closed at $85.03, which was up for the day, $5.91, or about 7.5%. So again, it doesn't look like that big of a range on this scale, but if you'll recall, it hadn't been too many weeks since we were using a $10 scale that covered the whole board. The reason that it's a smaller scale right now is I want to include last Friday, Black Friday if you want to call it that, when the market had a $45 range and actually closed down $30 for the day at $85 after dropping as low as $73.67. So yesterday we calmed down just a little bit. We tested that new low of $73.67. It actually went down to $71.36 for a brief moment yesterday, but it was so brief and it did not stay down below that we're starting to set a little bit of a base. Certainly, I think you can look at $70 as a hard base right now, and by that I don't mean to imply that we can't go through it. What I want to say is if we do go through it and we can't get back above it, well, that's going to eventually cause resistance at some point, but right now it seems to be support. And again, today we had a fairly calm day, just a range of about $10 with it closing in the middle of that range. Now, I do want to make a point as far as these ranges and why I find them handy to have. On this day, on Friday, when it went up immediately but then dropped down so low, the day before, I had sold about 60% of my mining stocks, and the reason I did that was because it was up near the top of a range that we had recently established. It was up around $120, and that Thursday, I did not want to go into Friday with that big of a position in mining stocks. Now, it wasn't just a huge amount of money, but for me it was, and I didn't want to hold the whole position, so I sold 60% of them, and even having done that, on this day, I lost about $500 or $600 just on the stocks that I had remaining. But with yesterday, with it holding that bottom and then going back up, I was able to repurchase some of the stocks starting on Friday at the lower points and then on Monday of this week. And then once it got up a little bit higher, I sold some more. And then this morning when it opened up, a little bit higher, I sold some more still, and then it went down and I bought everything back. And so right now I'm just about dead even from this terrible drop that we took on Friday. And the reason that I was able to do that was because we do appear to have a little bit of a range, some support here and about $90 for the top of the range. Very temporary range. I'm not trying to insinuate that 2 days is going to make any type of a range that we can become comfortable with. But as far as trading mining stocks, if you want to do that, you can do that within these ranges if you have some experience doing it and you're looking at stocks that you're comfortable with. I'm not recommending that you do that. I'm just saying this is something that I have been doing of late. So that's the market update for today as far as the actual price range. As far as the volume that we did on the COMEX contract, the COMEX front-end month, which is March, had a total trading of 123,469 contracts, which is about 617 million ounces of silver, which is about 3/4 of the annual mining production for the world. And that's about average since the beginning of the year and the turn of last year. So this was a pretty typical day volume-wise. And we're rapidly approaching now this February 27th, first day of notice for the March contract. And again, that's going to be an important contract, I believe. One of the things that I really like about these last 2 days is the fact that they've tested the lows, but they have come back off of those very nicely. It may be that the sell-off was just something that was massive but temporary, and if that's the case, it may be that the supply-demand factors are starting to take over again. Remember, the same people that wanted silver for their electric vehicles and their electronics and their artificial intelligence and all the rest of the things that industry uses silver for are still in position to where they have a demand for these products. They can't make, in other words, their products without silver, and unless they see a big downturn coming, they're going to continue to lock in prices on silver so they can do business. In addition to that, we have a number of sovereignties, nations that are buying silver as a strategic metal. That demand does not look like it has slowed down yet, so we still have the same supply-demand fundamentals that we went into last Friday when we sold off. It's just that when the sell-off started to occur, a lot of people piled in. There was a lot of margin calls. Certainly there was probably some hanky-panky going on with the big banks who are always seemingly involved in these sell-offs. They probably got out of some of their short positions, but I mentioned yesterday, the March contract still has a huge open interest on it, and the shorts may have gotten out of maybe 1/16 of their position on Friday, and they spent about all the capital they could afford to spend. So I'm not suggesting they're not going to try it again and try and push it down to $20 if they can. I'm just saying that they're pretty well extended, and now, because of Friday's massive downward drop, those people who wanted silver were very likely some of the ones that were buying all those contracts that were being sold on Friday, and now they're able to get silver at about $40 less than they had expected to for March. So watch the March deliveries. It could be a very interesting month. It could in fact change the way that COMEX does business. If they continue to have a massive delivery demand on that, it could change, again, not only the COMEX exchange, but all of the exchanges. I wanted to mention as well, just in January, they had 10,000 contracts delivered in a month that very rarely has more than a few thousand delivered. January is not a delivery month or a typical delivery month, and yet 50 million ounces of silver were delivered in January off of the COMEX. And then in February, we've only been open for 2 days, and there's already been 2,000 contracts that have taken delivery or have announced delivery, so another 10 million ounces off of the COMEX. And we're still looking at March, which has a massive amount of contracts that are still open. Obviously, not all of them are going to take delivery, but a lot of them will. And I believe if January and February are any precursor to what might happen in March, March is going to be an interesting month. So that was the open interest for today and some of the things that have been going on in that. Excuse me. I had several people ask me about my buy-sell schedule. It was something, I guess, that was a little bit confusing. And so maybe I can just kind of walk you through it just on one of the sales alone, or two of the sales maybe. But my last two sales were at a sale point of $95 and $100 I was actually able to get $105 for 100 ounces of silver, and I went ahead and sold that. And since that point, I've bought back well over half of it. But I wanted to show you one particular purchase that I made. This was made on the 26th of January, so the market was very high at that point. I found a deal on eBay. It was one that contained nearly a complete set of Walking Liberty half dollars, including the rarer dates, the 1916S, the 1921s, the 1938D. And so I was able to pick that up as part of the sale. Another one of the books that I had was just a partial collection of Franklin half dollars, nothing special here. Maybe one or two nicer coins. The 1948D is a very nice coin. And then also just a regular plain Jane set of Roosevelt dimes. I had the complete 48 dime set, and then they had another 2 silver dimes in that. So $5 there. I had $30.50 face on the Walking Liberties, and I think I had $9.50 face on the Franklins, a total of $45 face. And then I was able to get a lesser condition but complete set of peace dollars. And one of them, this one that's in the 1928 slot, was actually a 1923D, but they did include the 1928. It's been cleaned, but it's in a NGC holder. It's an almost uncirculated, and really when you look at it, it's an extremely nice coin. It just had a few spots on it that would show that it's been improperly cleaned, and so that was why it had an almost uncirculated rating on it. But the point I wanted to make is, for $4,250 on January the 26th, I got nearly 52 ounces of silver, and about $700 of that were just in a handful of coins that had some numismatic value. The 1928 has been selling for about $300 before commission on eBay, and the 1921D always goes very nicely for between $150 and on up, depending on the condition. This one was in a lower condition. The 1921, the 1921S, the 1916S also in lower condition, but still numismatic value for those of you who are familiar with this set. And then a very nice 1938D, which has a very low mintage. My point is that just the silver alone, nearly 52 ounces of silver, I got for an average of $82 an ounce before the market fell. But if you take those $700 worth of the numismatic value, still includes the silver in the other part, just what I could sell that for net after commissions, well, then you're starting to look at a price of about $68 an ounce. And that $68 an ounce compared to the $100 an ounce that I was able to sell one of my sell points at, and the $95 an ounce that I was able to sell, is more than $25 an ounce below that. And my attempt is to always buy whatever I sell back at a certain point below. When it's up to $100, $95, I want to make at least $25 an ounce. Now, I sold Canadian maple leafs, which have a much closer to spot premium than the 90%. But again, I got numismatic 90%, and still, after all of the calculations were made, I made well over $25 an ounce off of that for what I can get. And so this is what I mean when I have certain buy points and sell points. If you keep your eye out, you can get some good deals. Somebody got a really good deal off of eBay today. I saw it on the Buy It Now under the U.S. coins. It was 35 silver dollars, a mixture of Morgan and Peace dollars, and they were, I think it sold for $1,500. And I nearly got that, but somebody snapped it up before I did on a Buy It Now. my point is the deals are out there if you look, but you do have to look, and you have to know what you're looking at so that you don't get taken for something that could be counterfeit, or that you get involved with a dealer that's not particularly honest. The reason that this sale escaped me, I suspect, was because I checked it out for about a minute before I actually tried to buy it. And by that point, by the time I was satisfied that it was legitimate, it had already sold. But maybe that will help you on the buy and sell price as far as what I do. Again, I sold silver at about $105 an ounce. I bought it back at $82 an ounce, 90%. I understand that's not nearly as good, but it was numismatic. And when you take out just about half a dozen of the more rare coins, then I still was making it or buying it at about $68 an ounce. And so this is what I like to do. When I sell, I like to replace my silver. 90% is somewhat out of favor, to say the least, right now. And I like to take advantage of that. It's kind of how you can arbitrage within the same asset class. And certainly 90% is the weaker sister of all the silver right now, other than the sterling silver. One other observation today as far as what the dealers are doing. The dealers that are still in business, which is the vast majority of them. There were some that I don't believe made it through Friday because of this wild price fluctuation. But the ones that are still going are now finding that their demand is much higher, way higher today and yesterday, and even on Friday afternoon after the prices had gone down than they were early Friday morning and certainly the week before that. And so they have gone from not being able to unload their silver to having such a high demand for their silver that many of these shops are starting to sell out. Now they've got a problem because they're not able to replace it as quickly. And then they've also got another problem where their commission ranges are still extremely high, and they have to be. They've already been snake bit one time. Some of them have lost hundreds of thousands of dollars because of that drop. You cannot expect them to continue in business making a loss just so that you feel like you get a fair price when you sell your silver. They are businessmen and women. They are in it to make a profit. This is how they pay their bills. And so just understand that they have different motivations perhaps than you do. But I did want to bring up the fact that we're already starting to see the commissions start to go down and the commission ranges start to tighten up. Not with the big online dealers yet. If you look at JM Bullion, SD Bullion, they still have a massive commission spread. But some of the local stores are starting to get their commission spreads much more normal than they have been in a while. Vermilion has started advertising once again in Florida. A local coin store in Florida, their commission spread, and right now this is what they are buying their silver for. They'll buy silver dollars for $8 an ounce under spot, and they will sell them for $3 an ounce under spot. So just a $5 range on their commission for silver dollars. You're looking probably at about a 7%, 8% range in there. Not a bad range at all. I think that figures to selling them for or buying them from the public for about $60 an ounce and selling them for a little over $63 an ounce. So I guess that would be about a $3 difference. So we're looking more at a 5%, 6% commission on that. Very fair. They're 90%, which I think you'll find interesting because it's been hard to find anybody buying 90%. And if they are, they want to pay $20 under spot right now. But Vermilion in Florida is buying it for $10 under spot, the 90%, and selling it for $5 an ounce under spot. So again, a very small commission range on that, $5 an ounce for 90%, very reasonable. They're $9.99. They're buying from the public for $5 an ounce under spot, and they're selling it for spot. So again, that $5 spread. And then Eagles, probably their best their best commission spread, were at least from the ounce side, but they're buying Eagles at spot, and they're selling them for spot plus $3 an ounce. And so this will give you an idea of what some of the local dealers are doing, and you can compare those prices to your local dealer and see if they're starting to come back in line yet or not. The local dealers are starting to have some inventory shortages, which is highly ironic when you think about just a week ago they had such a glut that they felt like it was going to take months for them to unload that inventory, and now some of them are sold out in certain categories of their silver. And so the dealers, if this can continue, if we have a much more natural daily range than we have had recently, I think we're going to see the local coin shops start to get healthy again. If that happens, you're going to see the commission starting to tighten up again, and you're going to start to see a little bit more business as usual. I think it's going to be a while before it's completely as usual, but for shops that could not rely any longer on the wholesaler or the refineries, now they're starting to have a much more organic supply demand where their customers buying are matching the customers that are selling. And when that happens, they can offer much closer commission spreads than they've been able to in recent months. And so that's certainly a glimmer of hope right there. Again, the supply-demand factors are still firmly in place. Watch that February 27th date when they give the first delivery notice or the intent to take delivery for the March contract. If that's massive, well, we may be seeing a pretty good rise in the silver market. But if it's not, if it turns out to be something of a dud, well, obviously that could affect prices on the downside. I'm not giving you any opinion as far as what I think is going to happen. You can form your own opinion on that, but that will give you an idea of some of the things to look for. Anyway, that's the video for today. I hope this gives you some information that you'll find useful. I certainly appreciate your watching today. I've really enjoyed the comment section. Please keep those comments coming. There's been a lot of really good facts that have been shared within that. I've found a lot of information that I didn't possess until some of y'all notified me of it. And so please continue to bring those comments. I'm in your debt for doing so. Certainly appreciate your watching today, and I appreciate those of you who have subscribed. But until the next video, I hope that everything goes well for you. Hope you continue to have a rational plan and that you can exercise it without too much stress to your health as you're doing that. But thanks for watching today. Hope we'll see you again next time. God bless.